And we're live.
Okay, this is the finance meeting for September 17, 2024. Teresa, will you take roll?
Trustee Cook,
Here.
trustee Johnson,
Here.
trustee Peters,
Yes.
trustee Pandolfi,
Here.
trustee Whitehall. We have a forum. There's the background noise. Table.
We can. Ready to go?
Yeah.
Okay, the agenda's in front of you. I would like to make a change to move 7.1 up behind the minutes and before we go through financials. Is there a motion to the agenda and put that change?
That's so moved.
I need a second.
I just don't like so moved because the secretary can put anything she wants in there. So, sure, I'll second something that I don't know really what's gonna be in the minutes.
Okay. All right, you call the vote, please.
Trustee Cook,
Yes.
trustee Johnson,
Aye.
trustee Pandolfi,
Aye.
trustee Peters.
Yes.
Motion approved.
Okay. You have had the minutes, unless there are changes, and ask for a motion and a second to approve them. So.
I actually have a question on that. There it is. Before we get to that, so page, it's on the second page of the minutes on monthly financials. Third paragraph down. It said the tax revenues collections from all three counties amount just over $656 million.
Oh, that's a typo. We can correct that.
Well, I was looking at everything and like, oh, $656 million.
I will
Yeah.
correct that.
Okay, I think there's something maybe somewhere, but that was what I saw. Oh, same thing I think is true. Anyway, yeah, that's what. I assume that the decimal point.
I will correct that.
Well, the motion, so Ron, do you want to change your motion with the amended with change?
Yeah, I move
With the
the,
correction?
I move the approval of the approval passage of the agenda with the modification.
With the corrections. Minutes.
Yeah.
Second. Okay. Grace, will you take them out?
Trustee Cook,
Yes.
trustee Johnson,
Aye.
trustee Pandolfi,
Aye.
trustee Peters.
Yes.
Okay, motion carries.
All right. Now you're. This is Mark Stair. He is the senior audit manager from Hood and Associates, and is here to do the presentation of the draft audit financials.
All right, well, thank you. So I'll give you a little background on Hood and Associates first. Hood and Associates has been serving Missouri, Kansas, Oklahoma, and Texas since 1992. In our most recent peer review last year, we were awarded the highest rating given on peer reviews, which is a rating of pass without any comments. Our firm is, and many of our employees and partners are members of the American Institute of Certified Public Accountants, the American Institute of Certified Public Accountants Government Audit Quality Center, and our firm, as well as most of our leadership, is licensed in Missouri, Kansas, Oklahoma, and or Texas. The firm is licensed in all four. I personally am only licensed in Missouri and Kansas and allowed to do business in Oklahoma. You don't need a permit if you don't live in Oklahoma, apparently. The scope of our audit is, for the year ended June 30th, 2024. Again, this was the audit of the Consolidated Library District Number 3, known as Mid-Continent Public Library. And it's their financial statements, including the separately stated component unit. Our responsibilities are to conduct an audit in accordance with the generally accepted auditing standards and government auditing standards. That requires us to plan and perform our audit to obtain reasonable but not absolute assurance that the basic financial statements are free from material misstatement. Again, that's a high level of assurance. It's not absolute, but it is, we're fairly certain when we give an opinion based on that. We also have a report on, in accordance with government auditing standards, where we have a report on the internal controls and compliance with finance-related laws and regulations. That report is basically just to detail what we did as far as internal controls. We do not give an opinion on the internal controls of the library. The Auditing Standards Board of the American Institute of Certified Public Accountants recommends that we communicate the following matters to the governing board. There are 4 categories. The first is illegal acts. And we're happy to represent that no illegal acts came to our attention as a result of performing our audit procedures. The second category is for changes in significant accounting policies. This year, there were no changes to the significant accounting policies of the library. We do cover future pronouncements later on in the management letter. The fourth category is regarding difficulties with management. And again, we're happy to report that we did not have any difficulties with management in conducting our audit. And the final one is cooperation, which is kind of similar to the third one, but again, we're happy to report that we had full access to all the books and records that were necessary to complete an audit, so we didn't have any issues there. A financial and compliance audit addresses 3 basic questions. The first question is, are the basic financial statements free of material misstatements? To answer that, we have issued an unmodified opinion on the library's financial statements, stating they are fairly presented in all material respects, with the basis of accounting described in the report, which is GAAP. This is also known as a clean audit opinion. It's the highest level of assurance that we provide with an audit opinion. The second question is, are internal controls over financial reporting adequately designed and operating effectively? Again, we did not identify any deficiencies related to internal control over financial matters that we consider to be material weaknesses. We do not issue an opinion on the internal controls, but we would identify any of those weaknesses found. The third question is, did the library comply in all material respects with the finance-related laws and regulations? And again, we found the results of our testing disclosed no instances of non-compliance or other matters that are required to be reported to you. That said, we do have some management letter comments. Within our management letter, we like to make recommendations for best practices and possible improvements in internal controls. Even when we don't know a deficiency in the controls, if we find a way to improve it, we like to put that stuff in here. This year, we have 4 comments in our current section. And that is, the first one is a financial policy and procedures review, where we are recommending that you guys perform a review of all the financial policies and procedures, basically in line with the search for potentially getting a new accounting system. So anytime that you're in the middle of looking at new accounting systems, we typically recommend that you also look at all the policies and procedures and make sure that your policies and procedures line up to the strengths of the accounting system, and you get full advantage out of that accounting system if you're going to make a switch. So that's the motivation for that comment. Again, not that we found anything improper, but with the circumstances coming up, it's just a good time to do it. The second comment was on cybersecurity. Again, we did not find any evidence of any kind of a hack or anything like that, but there have been several high-profile hacks in the area, including Liberty Hospital, the city of Kansas City, and so on. So we've been including this comment in basically all of our reports this year to just make sure that you're taking another look at cybersecurity policies and being as secure as you can be based on kind of surrounding activity. The third note we have is for key employee and it says and cross training. It should be key employee cross training. Again, with the new accounting system potentially coming and just kind of the conditions here at the library where you have a lot of dedicated employees that oftentimes kind of grow with the library. That can turn into a lot of people having kind of segmented jobs. So we just like to throw that in every so often, every so many years, that you make sure that you're keeping people cross-trained just in case something were to happen and a key employee would depart unexpectedly. The final one is in every audit, the future accounting pronouncements. And since I don't have a copy of that letter, I didn't bring a copy of what those were. I should have.
It has to be 101, 102, 103.
Yeah, and there's nothing significant in any of the pronouncements coming. The most significant one is 103, which is a couple years away from being implemented. But we put those in the management letter so that you're aware of what's coming and the changes that may be required. Of course, we'll work with Jeremy and his staff if they need assistance in implementing anything with those. But as far as the first two most prevalent ones that are coming up, I believe you guys have already made the changes that would be required. So you probably will not have anything to do for implementation with those get here. Financial results. The library's assets and deferred outflows exceeded its liabilities and deferred inflows as of June 30th, 2024, resulting in a net position of $61 million. That net position increased $4.7 million from last year's as revenues exceeded expenses this year. So there's a neat little chart there. The next page is our statement of net position for you guys. If you'd like to peruse it, the library's most significant government-wide obligation is related to the Series 2018 certificate of participation with an outstanding balance at June 30th, 2024, $51,060,000, and other post-employment benefits of $5,082,727. As of June 30th, 2024, the library's net position, the net pension assets were $7.4 million compared with last year when it was $11.2 million. At the beginning of the year. So that's a change of about $3.8 million in the pension asset. The change in the net pension asset was partially offset by the net changes in pension related deferred outflows and inflows totaling $5,129,800. You guys have questions over the net position presented there? All right, to dig a little deeper into the funds, these are the non-government wide financials. The general fund balance did decrease $4,246,254 for the year. That resulted in an ending fund balance of $35,337,976, of which $33,652 and wow, a whole lot of numbers. 352 is unassigned. The unassigned fund balance is approximately 48.7% of the 2024-25 budget. So that fits within that goal of 30 to 50% of the next year's budget. The next page is just the statement of revenues, expenditures, and changes in fund balance for the governmental funds. I'll kind of let you look through that statement. There's nothing significantly out of the ordinary with that.
Question on that.
Yep,
On the general fund and the debt service,
yes.
the principal retirements and interest and fiscal charges, can you explain what that is?
Yeah, so that is, the payment on in the debt service fund, it's the payment on the cops.
I'm over in the general fund.
Yeah, the general fund,
Those are lease obligations under the new GASB.
yeah, that's under GASB 87. You guys have to have, your lease obligations on the balance sheet now. So now every year when you pay those, they show up.
These are operating leases. So this is the just present value. Yeah. Okay.
Yeah.
Okay.
Yeah, so it's just the lease information based on the new standard of 87 that you guys implemented. Or maybe
It's been a couple of years.
it's 2 years ago, because last year was Phoenix. Which are similar leases, but. So yeah, that's what that is related to lease obligations there. And. Other questions?
Yeah, I noticed we have a single, a single figure here for the long-term assets. I'm assuming that's historical costs, net of accumulated depreciation.
Correct.
Okay.
Yep,
I have another question on page 13.
sure.
And in the general fund, you have deferred inflows. These are unavailable revenue for leases, and taxes. Again, just explain those.
Yeah, so again, that's the amount of that lease liability, what's going to be paid in the next. I believe it's the next year essentially is, well, what's going to be, it's not what's paid in cash, but it's what's counted against that asset or liability. In accordance with GASB 87 again.
Okay, and then the taxes are what? 1,150,638. Yeah, that's on page 13, which I guess what I call the what I understand to be the books or the general ledger balance. Is that correct, Jeremy?
Yeah, I can jump in if you like.
Yeah,
So
go ahead.
the statement of net position on page 11, the statement of activities on page 12, the statement, the balance sheet, excuse me, on page 13 are all full accrual. And so the reconciliation between the full accrual and the statement of revenues, expenditures, and changes in fund balance, which is the schedule that we would normally look at for revenues and expenditures by fund for the current fiscal year, or where they explain the differences. And so about middle way down the page, it says deferred inflow of resources related to property taxes are taxes that are not available in the governmental funds, but are recognized in the statement of net position under full accrual.
Yeah, so to explain that, that's basically things that you would recognize as revenue, but they haven't hit your cash balance yet. So you can't spend that money because you haven't, it's basically like a receivable. But because it's taxes, it's not really treated like a receivable. It's a deferred revenue because it's already to the point of counting as revenue. It's just not available yet because you have to have the money available to be spent to count it in the government or in the non-government one.
So there's a corresponding asset for this, or is it?
No,
This is a
no.
non-cash item.
Yeah, the property tax receivable and the unavailable revenue offset. They don't offset completely. The difference between the two is our estimate for our doubtful accounts.
Okay.
Yeah,
All right, okay. All right, I have one more question.
yeah,
On page 13.
Yeah.
Down the fund balances, the compensated absences, previously had 2.4 million, this year it is 0. Assume that was an accounting change or a standards change or,
yeah. So that that's a change in the way you guys, for one, you guys changed your compensated absences or your pay periods to where the compensated absences are not as significant as they used to be because you don't have a full, this is different. This is the compensated absences. That was a change to be included in library services. And Jeremy, do you know why we made that change?
I think we just discussed that it was an immaterial amount. So it's no longer being reported as a reservation.
Yeah.
So we went, we had, at least what I thought I understood to be the case, that was for employees who have long-term buildup of vacation or sick pay. And if they all quit, at the same time, you would have.
Some of that is covered because of the change in policy that limits what is allowed to be paid out at this point. With that, it just is not, what was not a material enough number to warrant being separately reserved. But certainly it can be if you'd like it to be.
No, I was trying to understand why it went to zero. So is this?
Because it's now included in the library services.
No, I get that, but I mean, did we change your benefit structure?
It wasn't a policy change. It was the fact that we used to have pay by month and now it's pay by pay period. And so when we took the amount last year and reallocated it to the by pay period rather than the monthly, what was left over, the residual, was an insignificant amount.
Well, 2.4 million is, okay, to me is a material number. I guess maybe I'm missing a piece here, but if somebody's been here for 20 years, okay, and our HR policy says they can build up 500 hours of sick time and we're paying them, then did that go away? Did we change to where they don't have that benefit and we don't have that obligation?
With sick time, I'm unsure. I know that the way we accrue vacation time has changed.
The vacation time is now more limited than it was. So that $2.4 million is not anywhere near $2.4 million. At this point, I don't have the exact number in front of me, but I can get it. And so that's why the $2.4 million didn't go away, but it became significantly less to where it's less than materiality for the audit, which is less than $1.3 million, I believe.
If I could clarify, and Susan, please correct me if I got this wrong. The amount of vacation time that you can accrue is capped at 200 hours.
And it resets every 2 weeks. So if you're over whatever your maximum amount is, and not everyone at the moment can collect 200 hours of sick leave, or vacation time, it depends on how long you've been here.
Same as.
So, but every 2 weeks that caps. So if your vacation bank would be over, that whatever your maximum allowed is at the end of the pay period, you lose those hours. So it doesn't keep accumulating. You just can't go further than. Sick leave, we're paid out when someone leaves, you're paid half of whatever you've accumulated up to the maximum, which is 965 hours, 900.
So call it 500 for rounding.
Yeah, 500. You would get paid out for
If I've been here
250.
long enough, I can have 700 hours of accrued time, correct? Again, I'm using.
Yes,
round
but you
numbers.
wouldn't get paid for 700 hours because your sick leave, you only get paid for half.
No, I'm saying you said I could accrue sick leave of 965 hours?
Yeah, 960 hours.
So, but I get paid half of that, so I'm just rounding.
Oh, okay, yeah.
Rounding to
Okay.
500 to make this easy. So if I have 200 vacation and 500 of sick time, then I can get paid 700 hours
Yeah.
upon my departure.
Correct.
Okay, there's a number out there, I guess I'm not, it's a definition of what materiality is, but anyway. It doesn't change the total of 38,190, it changes the presentation.
Yes, correct. Yeah, So instead of having it reserved, like it was last year with the 2.4 million, it's just part of the bigger number already.
Okay.
Again, I can change that back if you'd like, and I can get you an exact number of the compensated absences.
Well, I guess relative to the other numbers that are in the fund balance, I mean, we have much smaller numbers. So if this is if it's a material number, I guess I would, and again, these aren't my financials, they're management's. But I think we should know what that number is.
Okay,
So,
I can get that for you, and we can make that change.
any other questions? Yummy, do you have any questions? You still there? Yummy? Are you on mute?
Can you check to see if it's still on call?
Yes, Trustee Pandolfi is still on the call. I can send her a chat message and see if she can answer that way too.
Were there any audit proposed adjustments?
This year there were no, there are some that Jeremy's going to make, there were none. They're all presentation and reclassification. So there's some that Jeremy will make to keep the balances in line with where we'll start next year. So when he provides us the TB, it's already to our numbers, and I won't have to adjust to my numbers.
So it's more presentation actual.
But yeah, it's just presentation, moving things between categories. There was nothing found that needed to be changed based on audit evidence.
Need to vote on the change.
No, these are, what do you mean, change in this?
I think if we're changing his report, we may need to,
No, we haven't, no, I'm asking for information.
no, the prior change that we requested.
Yeah,
We're
to
gonna look at it if we.
to separate the compensated absences back out of the.
Yeah, I mean, again, these are your financials, I think. I'm just trying to understand why we made that change and what the dollar is. So that's it.
So that's the question. Are we asking for him to change the draft that was presented to the board?
I'm not.
So we're leaving it.
I guess no, well, again, I'm not suggesting we change. I'm asking what that number is, because apparently there's still a number there.
There is still.
There's a liability there, and it's not separately stated. And I would just like to know what the number is.
I will also
I mean,
say
the impression to the reader, if I look at this.
the other part of that compensated absences reserve number is it was kind of just. It's not based on your actual compensated absences balances. It's based on an approximate amount that would be needed that we usually pull out of the next year's budget. And the next year's budget did not state what that number was that you guys wanted to set aside for a reserve. So I guess that's the main reason that it's not presented here in this format, is because we didn't have the budgeted reserve amount. So in the 2023-2024 budget, there's a comment specifically about reserving $2.4 million for compensated absences balances out of the library services of unassigned money. In the 24-25 budget, that comment is not present.
Okay, maybe
And this should be-
maybe I'm not connecting dots here, but first of all, I'll go back. The reader of this would look at this and say, I had 2.4 million obligations a year ago that are now zero. So that impression is that they went away, but in fact, they didn't. And I guess my understanding, again, it's been a long time since I did audits. But if I'm accruing for compensated absences, I would say as of a day, which is June 30, if all 700 employees walked out the door, there is a number that we would owe whoever has accrued balance is figured. And that- to me, that's what that number should be. At least that's how I look at it.
Yeah, we'll look at the work paper and if we decide to make a change, we'll up that on Thursday.
I see you're there. Do you have any questions? Three, two. Yes, okay.
No, I'm sorry. I think I got the mute thing worked out. No, I'm good. Sorry about that.
Okay. All right, those are my questions. So you can continue.
Well, the only other thing I have left is, we wanted to make sure, and I should have started at the beginning. Puddin Associates in association with Ralph C. Johnson, and company, who was unable to be here tonight, he will be here Thursday, I believe. We just want to make sure that we express our appreciation to the library staff, especially Jeremy and his team, and getting us everything that we needed to do to get through this audit very efficiently. And we certainly appreciate the opportunity to continue serving the library as the auditors. Thank you, guys, and I'll get you back a number on that, so you can know what that is, and then we can decide if we want to change that or not.
That's Jeremy and
Yep.
thank you. Thank you. And your part, I said, you know, stay for the meeting.
Perfect.
Unless you want to.
Thank you so much.
All right, thank you.
Thank you.
Okay, so do we need a motion? I guess you already have it typed up. There we go. So the motion is to approve the recommendation to the full board to accept the 23-24 comprehensive annual financial report and audit as presented, and I guess I'm gonna say subject. Or we're gonna put subject to this edit possible.
I think you all can leave the motion the way it is. If we make a change,
It's a presentation, only, so
we'll make a note.
okay. All right, so that's the motion. Did I make that or?
Yeah.
Did I make that? All right, I made the motion.
Second.
Any further discussion? Teresa?
Trustee Cook,
Yes.
trustee Johnson,
Aye.
trustee Gandolfi,
I,
trustee Diaz,
Yes.
motion carries.
Okay. Go back to item 5.1, Jeremy, or anyone?
Yeah.
Sorry.
Balance sheet. See over here. Not much to report on the balance sheet, just keeping a running cash of total cash. You'll note it's going down. So our year-to-date cash and investments, short-term investments, less than a year, are 27.4 million. Last year it was 38.4 million. And so that gives us almost an $11 million drop in cash 1 year over the next. I don't think I have anything else on the balance sheet unless anybody has any questions.
Just to clarify, I assume that's all profit related. Or most of it. When you say the combined, are we looking at the total, the 4.7 plus the 22.7?
Yes.
So the drop of, we just said 11 million. I assume is related to Propel disbursements, capital costs.
Yeah, I mean, that'd be the majority of it. The general fund went from 11. I think it was 10 million last year. It's about 4 million this year. So it's essentially both. Propel's the biggest portion. But as the general fund spends down, the cash reserve. So I had to borrow last year. Don't need to borrow money again this year. Moving on to the next two sheets are the taxes received. For the first 2 months, the library has collected almost $753,000. That's compared to 1.2 million last year. As I've noted in the past, we report what we actually receive. So some of this is a timing issue. I know for example, Platte County didn't pay us on August 30th. They paid us, I think, like September 3rd or 4th. So that payment will be on the next month's report. So comparing apples to apples makes it a little bit more challenging with the timing issues that we deal with. But we've collected roughly 1.17% of our budget for the year. And last year we collected about 1.9% of the budget for the year. So we're a little behind. But again, I think that has more to do with timing. It does actual tax payments. On to the next one is the general fund. And as I just mentioned, the property taxes are down about 468,000. I think this has more to do with timing than actual revenue loss. We're about 38% under our budget.
Jeremy,
Yeah,
the year-to-date budget looks like current month budget. So when I look at things like salaries, your personnel costs are 4.1 versus a budget of 2.2. But 2.2 is the current month budget.
you may have the report before we updated it.
I don't know, that's what's on the screen.
All 31.
I had submitted an updated one. So I believe it's on board docs now. Sure of that.
Trash this one.
Yeah. I apologize. I thought I got updated on the PowerPoint. So taxes are about 468,000, under about 38%. The rest of the revenue is pretty much in line with where it has been. Total revenue is down about 445,000. Again, the majority of that is property taxes. The payroll of 5.7 million is about 111,000 less, or 2% than last year. Library materials are up about 2.1 million. This is more of a timing thing again than an actual expenditure. Programming is down about $8,000, so 14%, 50,000 compared to 58 last year.
Back you up.
Sure.
So the electronic resources, because I know they used to pay, I don't know, the bulk of the annual subscription early. Did you go back to that?
We went back to that because they wanted to charge us a fee for essentially financing it through them. And then operations are about 54,000 less than the same time period last year, or about 3%. So with the change in timing to the payments for the electronic resources, expenditures are about 2.4 million higher than they were the same time period last year. The revised budget for expenditures is 6.3 million. Again, the majority of that was the library materials. So that'll even out as we work our way through the year. So the general fund revenues, including investment earnings, was just over $1,044,000. Expenditures were $10,850,000. So we have cash spent of about 9.8 million. Next slide is the capital fund. There's not a lot of activity here. Really just cleaning up project ending invoices as they come in for the final few buildings on the capital plan. No significant invoice or expenditures on either the headquarters or the capital replacement plan have occurred so far this year.
Yeah, we didn't put that on the agenda, but there was a contingency that's been hanging out there. What's the status?
The
of that?
contingency is being used for the renovations at Green Hills.
Okay.
So once that work's complete, we'll know if there's an outstanding balance.
In other words, it won't be for much.
There may be something, again, I just, you know,
Well, no, I mean, it was like 400,000.
in that neighborhood.
I think it was, and then Green Hills is coming out of that. So I think there will be, small surplus of unspent budget. But until we get through the Green Hills renovation, it's premature to say.
All right, so just so we have that number. Because I have it, I'll need it later, the balance sheet. Audit balance sheet. Where did that go? Was in the range of 1.5. So page 13 again on the draft audit, the capital fund has a surplus balance of 1.541, which includes that contingency. Is that correct?
Yes.
So take that out and we're 1 million, 1.1, which is what's been discussed in the last few months, several. No, really no material change.
No.
Correct.
Yeah. And the last slide to share is the health insurance fund. We've collected $824,000 in revenue, about 17% of the budget. Our expenditures are $576,000, roughly about 11% of the budget. So year to date, we have a positive income of $240, almost $9,000. Happy to answer any other questions anyone may have.
Now, do you have any questions? Ron or Bob?
No. Yeah, I just had a general question, not with respect to the financial. Looking ahead, over the past number of months, there's been a lot on the local news. Again, it's just news confined to 20-second segments, but there's been a lot to do with property taxes paid under assessments, determination from the state tax commission. Is there any idea if any of that stuff could affect future receipts?
Well, I think it's too early to tell. What the facts are is that the state tax commission ordered Jackson County to repeal values that were in excess, excuse me, of 15% over the last certified value. The county has appealed that ruling, and so that's where we are.
And we'll be collecting based, or the assessed valuations will be based on the county, or has that been barred by the state tax commission, or is it on appeal, or do we know?
It's gonna get out of my depth pretty quick, but it's my understanding all they can do is make a ruling. They have no enforcement abilities. So the county is in essence ignoring that ruling until they get a court order to do the same. The conversations that I've had with the county, they believe that the order is unconstitutional, therefore they have no desire to follow it. So that's why they're now suing the state tax commission or appealing, however you want to say that, the ruling. It then gets very complicated because it's a whole lot of if-then statements, so until we know what the courts have said about the state tax commission's authority to change the certified value in Jackson County, Missouri, the rest is very, almost esoteric.
Okay, so then anything final or definitive is probably years down the road. Is that safe to say?
I don't know that I would say years. I would say easily months, because obviously whatever this court decides, then either the county or the state has a chance to appeal that again.
So have you ballparked what this might be? Or is there a way to do
No, because
that?
there's really no way to do that. The county ballparked it, and I don't remember the number offhand. Do you? 3.2. I think it's 3.2 million.
For the, in the aggregate?
In the
For
aggregate.
the county, for all tax.
No, just for us.
Just-
That was,
okay.
that was our portion of what, if they did a strict interpretation of what the state tax commission said, they claim that the value difference would be about 3.2 million. There's a lot of question about, do they even have the legal ability to do that in 1 year? Would they have to tier that out? Do they have the authority to tier that out? And that's why I say it's like a choose your own adventure until we get a little bit more definitive as to who has the authority to make the ruling and what is the ruling. The rest is just speculation. But what the county has advised us is that if they had to go through with what they were ordered to do, they would essentially claw back $3.2 million. It's very unclear though, and the county doesn't even comment as to how or when that would happen.
Any other questions? Hearing none. Let's move on. No unfinished business that I'm aware of. So we'll move to 7.2.
Okay. We had put together a memo. Attached, I think it's as well. The memo basically just outlines the process. By October 1 of each year, we're required by law to establish a levy, pass that on to the counties. So those that are in charge of actually sending out the bills have the documents they need. So that process begins with the counties getting us their valuations. We received Clay County's valuation on September 11th, which is why we moved these meetings back to make sure that we have time to go through the process. Once we had those valuations, we then send that to the state. We fill out their pro forma document that's required under state law. And then the results of that, the assessed valuation from those three counties divided by the revenue that's allowed by restoring the voluntary reductions, the state calculated the rate to be 3,152. So the rate that we put in our budget estimate, and I'll get to this on the next couple of pages here, but our valuation was a little bit higher than what the actual value was. And so that rate is a little bit higher than what we had anticipated. The net difference between our budgeted revenue and this revised rate is about $471,000 or 0.068%. So if we move on to the next 2 pages, prepared some charts here. The first one should be, yes, the analysis of assessed valuation. So the first column on the far left is the actual certified assessed valuation in 2023. The middle column is what was used as our budget projection. Final, for the farthest right column would be the certified value for 2024. So the budget that you all adopted was based on a assessed valuation of 21.75. It's actually 21.65, so we're 0.47% off. And then you can see Clay County is a little bit higher than we anticipated. Platte is a little bit higher than we anticipated, and Jackson's a little bit lower than we anticipated. But the net is right at 102 million, basically, or 0.047%. So then the next slide takes these
Before you
values.
go, just before you go to Thursday, can you change personnel to personal? On that page. It's
I
personnel.
noticed that. Yeah.
on every- every section.
With that. The next page is the revenue, starting with the assessed valuation. It's discussed with the levy rate. Our budget projected 64.1 million. As I mentioned, the revised calculation will be 64.5, or about 0.74% higher than what we had anticipated.
Jeremy, I have a question. On the tax, we call this thing tax calculator.
The pro forma? Yep.
I think this is what the state approves and goes to the county or to the counties, but on page 202, can you just help me connect the dots here? It says the total revenue, line 16 is the total revenue permitted in current year, 67,333,40. You have 64,576,483 on your schedule. And you know the 95% collection rate. Is that supposed to be 95% of that, or are there other components within the 64 million?
Yeah, so there's a lot going on here. These forms are designed specifically for Hancock. Under Hancock, new construction and changes in valuation are exempt from the rollback. So what the state does is they take last year's assessed valuation. So they take, last year's assessed valuation, compare it to this year's assessed valuation without those two components, and then base the revenue on that. The final little asterisk down there says to compute the total property tax revenues billed for the current year, you actually take, what's that?
The page you're referring to?
The one view.
Yes.
The one, okay.
It's on board docs. There you go.
That page.
Just page 202. You want to get there?
Okay, I see it.
Yeah. Go ahead.
Yes, that total revenue permitted in the current year with that asterisk, the asterisk is explaining the difference between Hancock and actual what you should expect to collect. And so essentially what you do is you take that levy rate times the full assessed valuation, not the adjusted assessed valuation. That then becomes your actual tax revenue. From there, then we anticipate what our collection percentage will be. That's the number that you see on that chart that I just gave up.
Okay, and you're using 95, which includes the one, am I correct, 1.5? So you have a 3.5%
Yes.
delinquency. I think in the past, just for reference, I think we use 94%. So you're using 95. Sure.
Yeah, it bounces around a little bit. If you go to the statistical section, the last 2 years we've collected around 95%, which is why I went with that amount.
Yeah, no, it's fine. But it's all, but that, so the delinquency rate is 3.5. The assessor's fund.
Yeah.
And I don't remember do the assessor and the collector both have a fee?
Yeah, the net is 1.5. I don't know how they split it.
Anything else?
That's all I have.
Okay. So go back. Yes. To the beginning. There it is. What do we have? Is there a motion? And again, just for if you're looking at the board docs, both the 23 and the 24 tax calculator sheets are up there. For those that want to get into the weeds and the detail. You can see how it works. So
I don't think this is one.
Yep.
Oh, okay.
Okay, so I guess somebody has to make this motion. Or the 3152, which is the which is the calculated rate.
So move.
Is there a second?
I'll second, and I have a,
Well, there's no more discussion.
okay.
Now we can proceed.
And when we adopted this in June, did we have a rate at that time estimated? Yes, that second column shows 0.3116. See that? Right, so the rate we're gonna have in there is that listed up there? 3.15. Right, okay, no, I see it. Yeah, okay, fine, thank you.
Any questions?
No,
Further-
no, but
Further discussion? No? Okay. Teresa?
Trustee Cook,
No.
trustee Johnson,
Aye.
trustee Pandolfi,
aye.
trustee Davis,
Yes.
motion carries.
All right. Line of credit.
Yes, so much like last year, as I mentioned during the financial report, we do anticipate that we'll need to borrow money to cover the gap between when our anticipated cash flow is going to run out and our first significant tax distribution in December. We're projecting right now that's going to be around 6 million, which is double what it was last year. But we wanted to make you all aware of that, and then just make sure that there's agreement or consensus that we stick with our current bank for administrative ease. The rates last year were relatively insignificant. I think that was the decision the library made. But we want to make sure that everyone's okay with that. I have not gone out and bid it.
So specifically, just state the details of last year's. So
Don't have those offhand. Stated happened, I think, in June before I got here.
I think that was September.
It was actually approved.
No, I'm not asking for the board motion. I'm asking what was the actual terms of the line, which
Right, I'm trying to pull up the meeting. I think it happened at the June finance meeting last year. I looked it up earlier, I just don't have it memorized. There were 3 banks, I remember that.
oh,
Central Bank, BOK, and UMB quoted board went with Central Bank, I think it was 6.5%. Yep, Central Bank was 6.25% with a $4,000 origination or origin fee. BOK was 6.48% and UMB was 7.5%. So the conversations I've had with the bank, they believe the term will be relatively similar. So we'll get that to you all at your next meeting. If you wanted me to bid it out, I wanted to make sure that I had time to try to do that, but the the real concern I have is just a timing issue. If we find out, you know, at 8 a.m. from our bank that we're gonna go negative and we have to
Right.
go to another bank, get that line.
So to move this along, I guess I'm gonna make a motion that we recommend to the board to give management the authority to enter into a line of credit agreement with Central Bank on terms substantially similar to that of the 2023-24 year. And I recall the interest rate was somewhat like a point below prime. Anyway. I think prime is still about 8.5, but that's gonna probably change tomorrow. I guess it's dependent on what the Fed does tomorrow. Anyway. So that would be the motion, and it's, you know, if you can give details for Thursday, that's fine too, but that's the motion I would make.
Okay, second.
And, oh, let me put the amount in there. The amount last year, I believe, was 8 million.
It was 8 million. I think we should do that.
Yeah, so I guess be substantially the same. Similar terms, all right. Is there a second? I guess you seconded it. So that, all right, any other discussion on that? Yummy, do you have any comments?
No.
Question? Okay. Teresa?
Trustee Cook,
Yes.
trustee Johnson,
Aye.
trustee Pandolfi,
Aye.
trustee Theus,
Yes.
motion carries.
Okay. All right, last item on the agenda, at least business, pertains to the carryover from the 24 ending, or the June 24 period. And I put this back, or put this on the agenda. I don't remember, let's see. There's the budgeted transfer out of current revenues.
1.59.
1.5 million, okay. If you look at page 35, 36, and 7 of the budget workbook, in the past, we did not have a, well, I guess I'll call it a maintenance plan, at least one where we had estimates. We now have that. And those numbers start to be 2 years down the road, 2.8, 2.7, 2.5, page 35. Not the audit, but you have to get the budget book. You don't have that. Anyway. So we have currently about $1 million in the fund. I'm assuming that the $500,000 gets spent at Green Hills. And we have future obligations. If you present value these, that gets to be a pretty big number. I know the discussion was to pay as you go, but there is, from the current year, Jeremy, you can correct me, but the current year, and again, I'm looking at page 44 of the draft audit report, the excess of revenues over expenditures is $5,100,496. That includes the investment income. And if you take that out, let's round it to 4.1 million. In the past, up until 2 years ago, it was common practice to transfer the excess from the general fund operations over to the capital fund that provided I guess what I'll call the capital funds for facilities maintenance and repair. I guess I'm a proponent of planning, a little better planning, since we have this available and we know we have obligations. It would seem prudent that if we have this available, that we set it aside for these future costs that they may not all show up in the exact year that are out here, but we know we're going to have those costs. So it is, I think that it would be prudent for the finance committee and the board to allocate a substantial portion of that excess over to the capital fund so that we have it set aside for those future obligations, because we don't know what taxes are going to be. This Jackson County thing could cause a hiccup. I'm sure you would like that. You have things like SB 190. I don't know what the impact of that is going to be, but I know it's going to be out there. And I think that is for for next year. Am I correct? It doesn't affect, obviously doesn't affect this year, but it affects next year. So next year is a valuation year, and you would have the effects of SB 190 come in place. So I guess we can talk about this before there's a motion, or I can make a motion and we can talk about it.
Yeah, I just have a general comment. I think if there are excess funds that aren't currently allocated, I think there's great merit in acknowledging that Bob's committee down the road will be facing substantial expenditures for repairs, maintenance, and everything that I get the impression was not done many years ago. You know, hence 2016, we had asked for a lot of funds from the voters. And again, if the funds are not already earmarked, I think it, to me anyway, makes great sense in having that available for repairs and maintenance that you're going to be facing. Now, with that, of course, if it turns out that funds are needed elsewhere, it could be as simple as a journal entry. But I think to identify the future needs that the building committee is going to be facing, I think there's merit in making this again, it's an accounting entry, but making that entry.
Well, it's also a commitment that we're going to set those funds and dedicate them to capital absent, some emergency or otherwise, but which means it takes, a board action to utilize those funds otherwise.
And just with a general comment, I got the very distinct impression throughout the initial development of the Prop Bill activities from 2017 on that much of the things that had to be addressed appears to me as a non-construction person seem to be arising from a lack of maintenance and just the general repairs over the years that required a huge expenditure, and maybe some of that could have at least, if not been eliminated, at least postponed.
Yeah. I can't remember what we said when we were talking about that maintenance plan. How much a year were we going to contribute to it?
It escalates.
Well, I'm sure it was.
Starting at in 2 years.
27, 28 goes to 2 million, 2.5 and 30,
Okay, yeah.
3 million and 32. So, I don't want to make our economic predictions. I'm not in that business, but you've had 10 plus years of continued growth. There's no guarantee that will continue, or continue at the same pace. And if you have, again, if you have funds available and you can set it aside and you can let the interest build up, it will ease the burden in terms of the allocation down the road. And I hate to bring this up, but the investment decisions that were made 4 years ago were very expensive because money was locked in at about a 1% yield, and all of a sudden rates go to 5%. And when you're sitting on 24, 25 million, you're talking about $1 million a year of opportunity cost. So, you get these funds, you target maturities. Again, we're limited to 5 years, but you can pick up some yield not knowing what's going to happen, but at least makes that job easier to manage. So, Yummy, do you have any comments before one of us makes a motion or if I make a motion?
No, I'm good.
Okay, so Aaron, Jeremy,
No, I just,
I might make comments, I'm not exactly sure what the motion is. Yeah,
maybe, yeah.
it sounded like you wanted to reserve it in the capital fund for something, so.
Well, so let me go ahead and make a motion. The motion would be to I'm just gonna round and say, the motion would be to transfer $4 million of the general fund excess to the capital fund.
So you don't want to restrict it, you just want to put it in the capital fund.
I don't intend to put a further restriction. No.
Okay.
No, just to put it into the capital fund so that it, again, gets into the planning for this long-term maintenance plan.
How much formally is that?
Well, let's go back. Let's go to the audit report, page 44. I'll give you the numbers. Okay. This is a comparison of the budget, final budget to the actual. The internal financial statements from June, and just to give you that reference, that you presented in July, the excess was $3,997,286. That was before any investment income. There's been a nominal change in investment income. So if you take the 5.1 million, which is right here on page 44, okay, and you subtract the roughly one, if you go back to page 43, there's 998,000 of investment income. So again, I prefer to round. Gives you about 4.1 million of operating excess, and I would make a motion, we transfer $4 million of that over to the capital fund.
When are we starting actual maintenance expenditures for fiscal year?
Well, they could start anytime in earnest, but our original approach was to begin to build up the cash reserve for 2 years and then hope that none of the buildings have any significant capital needs for the next 2 years.
just for the sake, so we're all on the same page. There are maintenance needs, but then in our budget, we reference asset, like capital investments that may or may not happen, but still are part of our long-term plan. So those would be in places like maybe headquarters, Farview Library. And so those will require resources to do if the board approves. And then Bob, as we'll discuss in the building committee, I mean, we are aware of some capital needs that probably will be coming up at one branch in particular. I mean, well, not the branch itself, but in reference to Colburn. An amount that we don't know.
Well, again, so just for reference, the budget report shows at your beginning balance of 350,000. Actually, that's maybe there should be $1,350,000 if we already have $1 million left over. So so I'm going to call it $1 million. So if we have $1 million in the capital fund at the end of fiscal 24, the budget is to transfer $1.1 million. So it's 500,000 from somewhere else. So that would give us $2,350,000. If you throw the $4 million on top of that, gives you $6,350,000. And again, 2 years from now, your schedule says you have close to $3 million. You have 2.8 million expenses, and I don't know what inflation is going to do, but if you looked at your car insurance bill, it's probably up about 50% in the last 3 or 4 years. I don't know what's gonna happen to these costs, so.
Well, let me ask you, on this balance, do you presume 6 million you're talking about, if this 4 million's there, can be used for the headquarters building?
It would be used for the capital plan, whatever that building, whatever the board approves.
Well, like
Again, I'm not going to put it, the motion does not include a restriction to say it can only be used for X or Y. It is to put it into the capital fund dedicated to maintenance of the facilities. I mean, there's $132 million spent in the last 5 years on facilities, and $1 million a year of maintenance, in my view, is a little bit light.
yeah, I know that obviously this building is going to be a discussion in the near future. And yeah, there may be.
I don't know that that's a discussion.
No,
The discussion is to move $4 million over into the capital fund so that it is available for capital projects and capital maintenance of our existing facilities.
And Jeremy, this keeps us within our range, right, our with this transfer, right, so we're still within the range outlined by board policy, so.
Well, I am thinking about the one in Lee Summit that who knows what's gonna happen there, but I guess it'd be capital. So, okay.
Yeah, maybe you have any questions?
No, thank you.
Okay, so Teresa, why don't you read that motion? This is
Motion.
all.
Sorry. Motion to transfer $4 million of the general fund access to the capital fund.
Okay. Take a vote.
We didn't have a second.
Oh, Ron did. Ron seconded it.
Okay, sorry, thank you. Trustee Cook,
Yes.
trustee Johnson.
Aye.
Trustee Pandolfi,
Aye.
trustee Thies,
Yes.
motion carries.
Any other business? Anybody from down there? No? Okay, I'll take a motion to adjourn then.
So
I said,
I need that loud. A second?
yeah, I second the motion to
All right.
adjourn the finance. meeting.
Do I take a vote? Okay, yeah, take a vote.
Okay, trustee Cook,
Yes.
trustee Johnson,
Aye.
trustee Pandolfi,
Aye.
trustee Thies,
yes.
motion carries.